Over the past several years, we've seen a record amount of money and liquidity pumped into the venture capital space. Now, a lot of these private equity firms have identified single-family real estate as an investment class and have streamlined and pumped a ton of money into the asset class of single-family doors. Now, with the recent market shift that we've experienced over the past 6 months, it has thrown this entire model in a tailspin, where these big institutional investors that were parking tons of capital into the single-family space, we see the interest rates jumping up, and with quantitative tightening essentially sucking liquidity out of the marketplace, it's got billions of dollars of this venture capital sitting on the sidelines. Now, if we look at this time last year compared to where we are now in November of 2022, venture capital is down more than 50%. And again, there's billions of dollars of private equity's money that's sitting on the sidelines waiting to be released. However, the volatile market conditions that are going in this current season, it's hard to make an adjustment and even predict how low this market's going to go. So where do we go from here? We're seeing a lot of these firms start to look for and identify different asset classes. And in rough economic climates, real estate in many cases is the best and safest play. So where's this money going to go? A lot of these firms are shifting their focus and putting their eyes on multifamily real estate. Again, billions of dollars parked on the sidelines that had different areas to be placed. Well, when the market shifts, investors need to pivot. CEOs, startups, and venture capital groups need to see the shifting market climate in order to be able to adjust their model and dive in even in the midst of economic crisis. So over this past week, we've seen some very large groups such as Redfin, Zillow, who have made massive layoffs in their infrastructure. And there's a couple of these inside private equity firms who are in the single family real estate space that also cut down the amount of people and employees inside of their off-market divisions. What does this mean for the space as a whole? Well, I'm assuming that it's going to allow the smaller people and investors a strategic entry point, especially the groups that have solid access to capital, to off-market buyers lists, and other private equity firms that are still in the game. Now, I encourage you guys, no matter what level you're playing at, put yourself in alignment with some of these groups, some of these companies that are playing the game at a very high level. Real estate is a team sport, and together we achieve way more than we ever could alone. Now, inside of our community, the Investor Syndicate Alliance, we empower real estate investors with the tools that they need to scale. We educate, we empower them, and we give them the tools so that they can be effective no matter where they're at in the marketplace. Now, we're inviting any and all people to come into the fold to consume some of the free trainings and the mentorship opportunities that we have to level up your mindset, your attention, and get you on the fast track to closing more deals. Many fortunes are made and many fortunes will be lost in these shifting and changing economic conditions. I encourage you to lean in, become an expert at your craft, surround yourself with a powerhouse group inside of your inner circle, because at the end of the day, your network is your net worth. The people that come into the fold that help to edify you, build you up, and empower you are going to be the ones that are around when you're winning. So lean in, guys. In times of change, learners will inherit the earth, while the learned find themselves beautifully equipped to live in a world that no longer exists. The time is now. Dig your heels in, guys, and let's go.